Oh boy, look at that. It's another beautiful morning here in South Florida. And here I am with my Dunkin' Donuts coffee as the sun rises. Look, I am Kenny Polcari, your host of the party. And today is Friday, May 27, 2022, the beginning of the summer driving season, the long holiday weekend, Memorial Day. So what is it that you need to know? What is it that's going to drive the action today and into next week? So stocks are marching higher, right? They're now up 5 days in a row. Oil pierces resistance at 112.80 and is now heading towards $120 a barrel as the summer driving season begins. And so you got to ask, is the turmoil in the markets over yet? The latest retailers are reporting strong numbers in complete contrast to what we heard last week. The most beaten up names are by far the biggest beneficiaries. That makes perfect sense. And what are we doing for dinner? It's really dessert for your barbecue this weekend. We're going to have apple pie and ice cream. And who doesn't love apple pie and ice cream? Look, what did we hear yesterday? American shoppers are spending like drunken sailors at both department stores and discount chains, J.W. Nordstrom's, Macy's, Dollar Gen, Dollar Tree, all reporting strong sales increases, suggesting that not everybody is doing poorly, which goes right to my note yesterday in the Tale of Two Cities. This is in contrast to what we heard last week from TJ Maxx and Walmart and Target and Gap stores. So maybe consumers are going out to update their wardrobes and find bargains at some of the discount players to offset the surging food and energy prices. But before you go out and celebrate, while Macy's did report like great numbers and Dollar Chains reported great numbers, they did say that they are feeling the same pressures as some of the other retailers and warned that those same concerns and forces will begin to show up in their performance. But yet nobody cared yesterday. Stocks did well, rising once again as the tone appears just a bit calmer. Yeah, all the concerns are the same, right? Nothing has changed. The Fed is on track to hike rates. The pace of those hikes is still in question. Inflation is running at 8.5%. The consumer level at 11% at the producer level. The war is still going on in Ukraine, and the recession is coming. But none of these concerns played a role in the market action yesterday or for the last 5 days because we've had 5 up days, and today starts the summer driving season along Memorial Day weekend upon us, right? We are expecting lots of trains, planes, and automobiles as demand for travel and experiences hits a new high, suggesting that people are tired of being told to sit down and shut up, right? They're out, they're traveling, they're going, traffic all over the place, airports just clogged. It's unbelievable. By the closing bell yesterday, the Dow added 520 points, or 1.6%. The S&P up 80 points, or 2%. The NASDAQ rallied 370 points, or nearly 3%. The Russell added 40 points, up 2%. And the transports gained 400 points, up 3%. 10-year bond yields are now yielding 2.74% as investors are pricing in a slowdown that is supposed to come as the Fed begins to tighten. It's also telling you that the market expects to see inflation subside sometime in 2023, which is at least another 12 months. Remember, U.S. Treasuries usually perform better in a slow economic environment as investors move into the safety trade, so they buy bonds. And so many of the talking heads are now moving to more of that soft landing narrative once again, right? They're trying to drive you away from the hard landing, steering you into the soft landing, saying that the Fed has already done enough to cool the economy. My very good friend Ron Insana, and many of you probably know him, penned a piece yesterday on CNBC.com. So you can find it, and in this piece he makes some valid points. And while I respect Ron, I am still in the camp that the Fed has not done enough yet. That they must and will take rates higher in order to tame inflation, if that's what they want to do. I am thinking that we already may be in a recession in parts of the economy. All you have to do is go out and ask Joe Q Public, see what they think and what they are doing to manage their way through this economic cycle. And I'm sure you'll find more of those people concerned about where we are and that we're already in a recession. Look, oil continues to trade higher as supply concerns remain front and center, supported by the EU ban on Russian oil and rising demand around the globe and the start of the summer driving season in the U.S. Yesterday morning, oil was churning at $111, $112 a barrel. Resistance was at $112.80. Remember, I told you that if we test and pierce that level, then watch out because the March highs of $120 were going to be in sight just as the summer driving season kicks off. Wednesday, we learned that U.S. crude and gasoline stockpiles declined, and that was only going to add upside pressure. Well, guess what happened? Yesterday, oil did exactly that. At 9:55 a.m., it tested, it kissed, and it pierced $112.80 a barrel, and then it exploded higher, closing the day at $114.26 a barrel. Overnight, it tested as high as $114.99, and it's since backed off a bit, trading this morning at $113.90. But either way, we have pierced the resistance, and 120 is in the bullseye. And the traffic has already begun. The long weekend exodus started actually on Thursday evening, and it's going to pick up all day today. So strap in, because gasoline prices are going higher. Yesterday saw the most strength in consumer discretionary, and you can credit the solid reports yesterday in the sense that last week's beating may have been a bit overdone. The XLY, which is the discretionary index, rose 5%. But remember, that sector was down 32% year to date coming into yesterday morning. Behind that, we saw investors go after communications, XLC, technologies, XLK, sending both of those sectors up 2.5%. Again, those sectors were down 26 and 24% respectively year to date. Financials, XLF, and industrials, XLI, both up 2%. Consumer staples, XLP, and energy, and basic materials all up just over 1%, with utilities carrying up the rear at up 0.3%. The semis, the SOXX ETF rose 4%. Cybersecurity name CIBR rose 2.6%. Disruptive tech, represented by ARK, ARKK, rose 4%, leaving that sector still down 55% year to date. Coal, natural gas, and steel mining sectors also finding love from the buyers. They rose nearly 5%, but they have also been strong all year anyway, so it only added to the excitement. NVIDIA, which reported on Wednesday evening, we all saw that, right? Leaving the trader types angry like a rabid dog as they took it down 11% in the after-hours session. Well, yesterday, not only did they take that 11% back, but they added another 7%, right, to end the day at $178 a share. This is one of those tech names that I am really hot on. I love NVIDIA. Most people do. It's gotten so beaten up, down nearly 40% for the year, but it is clearly looking a bit more interesting. Not to chase it, but to put it on your shopping list to buy on further weakness. It's just a thought, something you should consider. U.S. futures are up again this morning as the sun rises up over the Atlantic. Dow futures up 35, S&P's up 12. The NASDAQ gaining 55 points and the Russell up 6 points. So you got to ask, is this dip buying or has there been a change in investor psychology? My guess is that it's a bit of both, right? The trader types are buying the dip while the longer-term investors are identifying opportunities that have been created in this mess. Weakness in the big names, they're looking at all the weakness in the big names that form the foundation of a solid portfolio, and those are starting to get really taken up, right? Eco data today includes the Fed's biggest and favorite inflation gauge, the PCE deflator. It is expected to show up 0.2% month over month and up 6.2% year over year. Yes, the metric is below the CPI report, which is why the Fed likes it, because it fits their story, right? It doesn't show inflation so drastic. In any event, the risk here is to the upside. If it comes in stronger, then the Fed will be forced to do more. If it comes in at 6.2 or less, not sure how that could happen, but we'll see, then look for markets to rally hard going into the weekend, as that would suggest that maybe Rafi Bostic, Atlanta Fed president, is correct and a pause is in the offing. We're also going to get the personal income, personal spending at plus 0.5% and plus 0.8%. Spending up due to much higher prices for food and energy, which is why spending would be up. Kavish? Okay. Now, cryptos, very interesting. Bitcoin and Ethereum remain under pressure. Both continue to trade lower, and this morning we see Bitcoin at 28,800, Ethereum at 1750, down significantly off their highs of last year. JP Morgan, though, comes out with a piece this morning saying that the recent slide has created significant upside for crypto investors. Now, that view comes from one of the analysts at JP Morgan, Nicholas Panzagoglu, I can't pronounce his name, which is in complete contrast to how CEO Jamie Dimon feels, right? He thinks it's worthless. But in either case, it is what it is, and JP Morgan is giving clients access to this asset class. Look, it is a risky investment. It is not for the faint of heart. My guess is that it's going to go lower still before it finds any support. And where might that be? Well, it's broken all inline supports. The most recent was 29,500. So it's trading at 28.8. I think the next stop could be 20,000. Just saying, I don't think there's any reason at all to chase any of them. If you want to be in the space, let it come to you. Expect further weakness before you should really expect any significant rally. The S&P closed at 4,057 last night. It looks like it wants to test and kiss 4,100 this morning, and most likely will do so if futures remain higher. The PCE comes out at 8:30, so yes, we're going to know before the opening bell what the read is and then what the market will do. Yesterday, I said that we were in the 3,800, 4,100 range. If we pierce 4,100, I would expect to see a trader type sell into it. I'm just not convinced yet that the turmoil is completely over. But I am warming up to the idea that we're closer to the bottom than not. The action will continue to be driven by the Fed, by the pace of inflation, and the looming threat of a recession. Okay. So what are we doing for dinner tonight? It's not really dinner, like I said, it's dessert. You can have this over the weekend at your weekend barbecue. And who doesn't love apple pie and ice cream? It is all American, right? And so it's just one of those dishes you have to serve this weekend. So what do you need for this? It's relatively simple, right? Because you buy the Pillsbury ready-made crust in the grocery store. It makes it easy. So you need 2 tablespoons of all-purpose flour, plus a little bit more just to dust. You need the Pillsbury ready-made pie crust. You need 2 Granny Smith apples, peeled, cored, and sliced. You need 3/4 cup of sugar, plus an additional for a little bit to put on top of the pie. You need lemon zest. You need the juice of 1 lemon. You need 1/2 teaspoons of cinnamon, a 1/2 teaspoon of nutmeg, 2 tablespoons of unsalted butter, 1 large egg that you've gotten beaten. You want to preheat your oven at 375 degrees so that it's ready when you're ready to put the pie in. Now you want to roll out the pie crust, right? Open up the box, just unroll it. If you've never done it, just unroll it, lay it flat on a floured surface. Lightly butter the pie dish. Then place one of the doughs into the pie plate and form it around the plate. That's nice. Wrap it over the edges so you can put all the apples and stuff in there. Now, in a large bowl, you're going to take your sliced apples, the sugar, the lemon zest, the lemon juice, the spices, and the flour. Put it all together, toss it well so that it's all coated. Now you want to put the mix into the pie pan, into the dough. Always add just a bit of butter on top of that. Then take out the other half of the pie crust, roll it out, and then cover the pie. Using your thumb and forefinger, make a ribbon by crimping the edge all around the pan. Right? Now, using a butter knife, you want to cut 2 or 3 slits just in the top. Not deep, just, not big, just little slits. Brush the top with a beaten egg and finish by sprinkling a little bit of sugar on top. Put it in the oven, bake it for 45 minutes or so. You want a nice golden brown crust. Remove it, let it cool, and then when you're ready to serve it, take it out and serve it with nothing more than vanilla ice cream, whatever you like, Haagen-Dazs, whatever you like. But make sure it's vanilla ice cream and apple pie. And actually, if you want to warm up the apple pie, take it out of the oven, let it cool. And then before you serve it, put it back in the oven a little bit just to warm it up. And then slice it with the cold ice cream. Oh my God, it is so delicious. And it is so American. And this is such an American holiday. And God bless every veteran that went and fought for our country. In any event, have a great weekend. I think the weather's going to be beautiful. I won't see you on Monday, but I will see you on Tuesday. Until then, take good care.